Thinking about buying a home in Delaware in 2026? Here's the good news. You can borrow more with a conventional loan than ever before, and you may not even need a jumbo loan at all. Hi, I'm John Thomas with Primary Residential Mortgage, your local Delaware mortgage expert. In this video, I'm going to walk you through the Delaware conventional loan limits for 2026, and more importantly, what they actually mean for your budget, your price range, and your home buying plan. We'll cover the new 2026 Delaware conforming loan limits. We'll compare how they compare to 2025, what this means for buyers in Newcastle, Kent, and Sussex County. We're going to give you some real dollar examples so you can see how it works. We're going to give you a simple step-by-step plan to use these new limits in your home search. So if you're buying in Delaware, whether it's Wilmington, Newark, Middletown, Dover, Smyrna, or even the beaches, this video is for you. Beginning January 1st, 2026, the conventional loan limit for a one-unit home in all three counties of Delaware, Newcastle, Kent, and Sussex will be $832,750. Delaware does not have any high-cost counties, so this same base limit applies across the entire state. There's no special high number in one county versus another. Here's what this means in plain English. If your loan amount is at or below $132,750, you're in a standard conforming conventional loan. If your loan amount's above $832,750, you're usually looking at a jumbo loan or a combination of a conforming first mortgage with a second mortgage. These updated loan limits matter because they help you define how much you can buy in Delaware without stepping into a jumbo guideline. Before we go deeper, let's make sure the terms are clear. A conventional loan is a mortgage backed by Fannie Mae or Freddie Mac. It is not an FHA, VA, or a USDA loan. The conventional loan limit is the maximum loan amount that Fannie or Freddie will buy in a given county for a certain property type, 1 unit, 2 unit, 3 unit, or 4 unit. When your loan amount is at or below this new limit, that's called a conforming loan. Above, jumbo loan. This limit is set each year by the Federal Housing Finance Agency, or FHFA, based on the home price data. And again, in all three counties, we use the national baseline limit. We don't have any counties with special high cost limits, which some large metro areas like in Maryland or New Jersey have higher cost areas. Now let's look specifically at Delaware for a one unit home 2026. The new limit, $832,750 in Newcastle County, $832,750 in Kent County, $832,750 in Sussex County. The key to remember is this is the base loan amount. This is not the purchase price. You can actually buy a home above $832,750. You just have to put down the money difference between the $832,750 and the purchase price. Also, if you're looking at a 2, 3, or 4 unit, the loan amount is actually higher than the 1 unit, so you can borrow more. If you're not sure whether the property you're looking at is considered a 1, 2, 3, or 4 unit, that's something my team and I can help you figure out. All right, let's talk about how these loan limits went up. The baseline 1 unit conforming limit for Delaware increased from $806,500 in 2025 to $832,750 in 2026. That's an increase of $26,250, which is about 3.26%. So why did the FHFA bump it up this year? Well, they track home prices using something called a home price index. Every year they look at home prices have moved up over the last 4 quarters. If home prices have gone up, they increase the baseline loan limit. If prices go down, they do not drop the baseline. It just stays the same as the previous year. So if you're a Delaware buyer, here's the big takeaway. More homes in Newcastle, Kent, and Sussex County now fit inside conforming loan limits instead of being forced into a jumbo or a first-second combo. So this gives you more flexibility in higher priced areas. Now let's look at some real world examples so you can feel more concrete to you. So example 1, buying a home in Newcastle County, purchase price is $850. You're going to put 10% down. That's $85,000 down payment. Your loan amount would be $765. $765 is under the $832,750 limit for 2026. So you could use a conventional conforming loan. You don't need a jumbo. Now the old 2025 limit of $805,600, you'd still be under that. So you'd be fine. Now let's go, say you're going to buy a house in Sussex for $1 million and you want to put 20% down, that's $200,000. Your loan amount is $800,000. Even though the home costs $1 million, your loan amount is $800,000, which is below the $832,750, so you're still conforming. All right, so even though the purchase price is $1 million, with 20% down, your loan amount goes below the limit. All right, let's take a look at what happens when the purchase price and the down payment puts you above the loan limit. So let's say you're buying a house for $1.3 million, 20% down is $260,000, so you need to borrow $1,040,000. Well, the $1,040,000 for 2026 is above the conforming loan limit for Delaware of $832,750. So at this point, you got two choices: one loan, a jumbo loan at $1,040,000, or get a conforming first at $832,750 and a second mortgage for the remaining $207,250. So that's a first-second combo. Now, which one's better? Well, that depends on your credit, your debt-to-income ratio, your cash reserves, different things like that. So we'd have to run the numbers and see which one made better sense for you. All right, other times the first-second combo gives you more flexibility for a better blended payment. Sometimes the jumbo loan works. We just got to run the math on your scenario. All right, now that you know the numbers, let's talk about how to actually use these limits when planning to buy a home in Delaware. Step one, remember the Delaware number $832,750 for a 1-unit in Newcastle, Kent, or Sussex. As long as you stay below that number with your loan amount, you're golden, okay? Over that number, jumbo or first, second mortgage combo you're going to need. All right, step two, work backward from your budget. Next, don't start with the loan limit, start with your budget. Ask yourself, what's a comfortable monthly payment for me and my family? How much do I have available for down payment and closing costs? From there, we can work backward with you to come up with a maximum purchase price, and then that will determine the loan amount you'll need. And that we'll see whether that loan amount is under the 832 or above, and then look at your options. Step three of the process is get a real pre-approval, not like some online pre-qual. It's the big difference between a quick online pre-qual and a real pre-approval. You want to get everything checked out, your documents reviewed. So my team and I, we only do solid pre-approvals. We review your actual income docs, W-2s, pay stubs, tax returns, review your assets, bank statements, retirement accounts, whatever. We pull and review your credit report and your credit scores. We run your file through either Fannie Mae or Freddie Mac's automated underwriting system to make sure you get an approval. So when you do that, you're going to be approved for a loan solid, okay? And then we'll look at your goals and determine, do you need a conventional or a jumbo or a first-second combo? So that's a lot stronger than a quick, you look good pre-qual that hasn't actually been underwritten through the automated system. All right, step four, compare whether you need conforming jumbo or a first-second combo. So if the price range puts you near or above the 832, we'll have to show you rate differences between a conforming and a jumbo, payment difference, closing cost difference, and how a second mortgage could help you keep the first mortgage at conforming, stay out of the jumbo, and see if that's a better option for you based on combined payment first and second and cash to close, all right? Step five is coordinate with a Delaware real estate agent and sign a buyer's agency agreement. Once we get you a pre-approval, it'll have the purchase price, the loan amount, and what loan type. So your agent knows how to go shopping for a home and how to negotiate the correct terms. So you want to focus on homes that actually fit both your budget and the loan program and the loan limits you have. With stronger offers backed by a detailed, solid pre-approval from my team, it will make you stand out in this market, whether you're buying in Wilmington, Newark, Middletown, or even the beaches, where good homes sell quickly. So let's hit a few common questions I hear from Delaware home buyers. So question one, do all three Delaware counties have the same 2026 loan limit? Yes, all three counties share the same loan limit, whether it's a 1-unit, 2-unit, 3-unit, or 4-unit. All right, second question I get, do the 2026 limits change for duplexes and multi-unit homes? Yes, it's higher on a 2-unit, even higher on a 3-unit, and the highest on a 4-unit property, okay? The exact number you can see in my blog post. I have a picture showing you what the limits are in each county for the unit type. Question three, if you go over the 832,750, do I have to put 20% down? Not always. Once your loan amount's above the conforming limit, you're either in a jumbo or a first-second combo territory, and the loan program that we're using will determine what your down payment needs to be, okay? Question four, can I still use low down payment conventional loans in Delaware in 2026? Yes. Many Delaware buyers can still use a 3% or a 5% down conventional loan program in 2026. Again, the key there is just make sure your loan doesn't go over the 832,750 and you meet the credit score, income, and debt to income ratios for that program. And we'll confirm all that at the pre-approval. Question five, how do these higher limits help move up buyers in Delaware? Well, if you're selling a starter home and buying again, the higher 2026 limit lets you move into a more expensive home while staying in the conventional loan limit, okay? Helps you avoid a jumbo loan, which has stricter guidelines and stricter debt to income ratios. So it gives you more options in higher priced areas like Middletown, Hokeston, and the beaches. Now, as a branch manager and certified mortgage planner or presidential mortgage, my goal is not just to read out the new loan limits. My job is to help you build a clear mortgage strategy that fits your goals. For Delaware buyers and homeowners, my team will help you understand how much house you can buy under the 2026 conforming loan limit. We'll help you decide whether You need a conventional FHA, VA, or USDA, or a jumbo, or a first, second combo. We'll determine if, hey, can we get some seller paid closing costs to help us with our cash to close? We'll complete cash to close breakdown, not just a monthly payment estimate. And again, we lend in Delaware. We also lend in surrounding states like Maryland, Pennsylvania, Jersey. So anywhere you need help, my team and I can help you except for New York. If you want to see exactly how the Delaware conventional loan limits for 2026 apply to your situation, here's what to do next. Give me a call, 302-703-0727, or you can apply online on my website at PRMILoanApplication.com. Check it out. We'll get you going. We'll give you a consult. We'll go over everything and see where you're at. Have an amazing day. And again, if you like this video, please like and subscribe.